The Indian rupee on Monday plunged to a record low of 90.78 against the US dollar, marking its weakest level ever and extending losses for the third consecutive session. At the interbank foreign exchange, the rupee opened at 90.53, briefly strengthened to 90.51, but soon lost ground, touching an intraday low of 90.80 before settling at 90.78, down 29 paise from its previous close. On Friday, the currency had already slipped 17 paise to close at 90.49. Forex traders attributed the sharp fall to uncertainty over the India-US trade deal, strong dollar demand from importers, and persistent foreign institutional investor outflows, which continue to weigh heavily on investor sentiment. Despite a better than expected trade balance, the rupee failed to find support. According to Dilip Parmar, research analyst at HDFC Securities, the rupee has emerged as the worst performing Asian currency, primarily due to a demand-supply imbalance driven by high dollar demand and sustained capital outflows. Amid the currency volatility, Commerce Secretary Rajesh Agrawal said India and the United States are very close to finalizing a framework trade deal, though he refrained from giving a timeline. He confirmed that parallel negotiations are underway, one on the framework deal to address tariffs and another on a comprehensive bilateral trade agreement. Market outlook, however, remains cautious. Anuj Chaudhary, research analyst at Mirae Asset Share Khan, said the rupee is expected to trade with a negative bias, citing delays in the Indo-US trade deal and ongoing FII outflows. He added that a weak dollar or RBI intervention could offer some support, with USD INR expected to trade in a range of 90.30 to 91 in the near term.